And live. Hello. I think the stream has started. Yep. Okay. All right. So, oh dear, what is happening to this? Okay, it's fine. Right. Okay. So welcome to the stream. Right. This is my main content for the channel. Right. Mainly going through accounting questions. More specifically for beginner level, right? The goal is actually to help students and adults alike grasp like the basics of accounting, right? A little bit of introduction to the channel. First of all, if you find this live or the VOD, yes, welcome. This is what I like to do, mainly for my channel, right? Even though it's less frequent because I think that we need time to absorb, the knowledge. So I tend to space it out a little bit more. And in between, I'll just stream whatever I like, right? But yeah, other than that, today we're going through, a examination question, right? Previously we finished up to, paper 1. So now we're starting on paper 2. So yeah, it's gonna be an interesting what do I say? Interesting experience for me as well, because I've not done this sort of questions before at this level, right? So, and also I don't look at the answers unless I really don't know the answer to it. So I always give my, first attempt. So forgive me if I get things, slightly wrong and things like that. But yeah, without further ado, we shall just take a look at the question, shall we? Oh yeah, again, I'll use my explanation that I think more people can relate to, right? But if you don't understand the explanation that I gave, just know that it is perfectly fine, right? Everyone, relates to different things. So if you don't understand something, just, voice it out. So I'll try and find a different approach to explain it, right? Other than that, yeah, if you are watching the VOD back, please just leave a comment if you don't understand something. I do read them frequently, right? And yeah, without further ado, it is 12 p.m. UTC, so we can start. Where is my there we go. Okay, so we're given this question, right? So the following balances were extracted from this company, right? OPQ, on 31st May 2025, right? So before that, we look at the question. What do they want us to do first with all the information they gave us, right? So they want us to first prepare statement of financial performance, which if you understand it by their different terms, it can mean income statement, it can mean statement of profit or loss, right? Those are the two common names of it. And for the year ended 31st May 2025, so we know that whatever information they extracted beforehand, it was, it was the final day of the year. Sorry, I lost my train of thought there. Right. So, yeah, and then the lines below are just a template that they follow, right? So, let's look at the question again, right? We go line by line because it is more straightforward, at least for me, right? So, first things first, we identify what classification. So, classification, I mean assets, liability, or equity, right? It could also be EQ for equity. It could also mean revenue or income if you prefer, and expense, right? EX for expense or EXP, whatever name you choose, right? And we just label each each class of account as we go along. Okay, so the first one, office equipment at cost, right? The keyword here is at cost, meaning when you bought it, how much did you pay, right? So this is an asset because office equipment is something that you use in your business to generate more benefits in the future, right? Motor vehicles, same concept, right? You use it for deliveries, use it for, driving to clients, if you are doing services, right? A lot of things, right? But you're using it to conduct your businesses, right? And you're gonna earn from whatever benefits that it provides, right? So consider asset. Accumulated depreciation is not to be confused with depreciation expense, right? Accumulated depreciation is all the previous years worth of depreciation accumulated together, meaning added together, right? So it was from past years and it actively subtracts from your cost, right? So this is a special account. It's still considered an asset, but it takes away from the value of your asset, okay? So if you want to make a distinction, you can say this is a minus asset, but it's still an asset class regardless, right? Now, if you look at this, right, and you see accumulated depreciation, and you notice that I said depreciation expense before this, right? So these are actually linked to a class of accounts called expenses, or EX, which I wrote just now, right? So more specifically is the depreciation expense, right? Okay, depreciation expense. And the way you calculate it depends. You need to look at the question for this, right? But you need to note that it is an expense that you need to recognize because sometimes the question doesn't tell you straight up, but you need to know, right? Next up is sales revenue, which is revenue, right? They did tell you. Sales returns is also a revenue, but it minuses. You subtract it away from sales revenue, right? Cost of sales is an expense. Okay. So all of these are, revenue and expense. They are used to describe an action that caused an asset to decrease in the case of an expense, liability to increase in a expense, right? Hello, thank you. Okay, I could add you later. Yeah, okay. All right, back to the lesson itself, right? Right. So expense, right? It doesn't actively. It's used to describe something that happened that decreased your asset or increased your liability or increased your equity, right? That is expense. Revenue is the opposite. It's used to describe something that happened that increased your assets or decreased your liability or decrease your equity. It could be a combination of all, but the direction stays the same, right? But yeah, this is the basics, right? Of course, there are exceptions out there. Things like reversals, things like just negative expense. Sometimes that happens. But we stick to the basics first, right? Inventory is asset because you're using it to sell, right? You're gonna sell it in the future. Hopefully you get more what's that called? You get some revenue from selling it, and hopefully your expense incurred while selling it isn't higher, right? Isn't higher than whatever that you earned, because that means you're selling at a loss, which is kind of tragic, right? Right, so back to it, right? Loss on sale of a non-current asset. So this is a loss on disposal. If you're more old school, you'll probably know it as that, loss on disposal. So it's an expense, right? Wages and salaries is an expense because you have paid your salary to, your workers, right? You have paid it already. And this is just used to describe the payment. So it shows the decrease in asset, right? Because you paid in cash or check. But yeah, essentially it just means that, your amount of money decreased, right? And cash is considered an asset. So you can kind of see the link there. It takes a bit of time to actually get used to it. So the only real advice I can give you is to practice it a bit. You know, if you see your day-to-day activities, it might sound a bit what's that called? Absurd. Yeah, but you could think of daily activities as, you know, in accounting terms, which is a way to practice. But again, it sounds absurd. So if you're serious about studying it, why not give it a try, right? Utilities expense. Oh, sorry, my pronunciation. It says expense in the name, right? Rent expense, you know, trade receivables. This is basically how much your customers owe you, right? If they owe you, it means that you're gonna receive it in the future, right? Future benefits. So it's considered an asset, right? Trade payables means how much you owe your suppliers, and this will be considered a liability, right? Allowance for impairment of trade receivables. The term here, allowance, means that it is a permanent account, right? So this is actually a negative asset. So we call it contra asset. Contra means actively subtracting from, right? So it actively subtracts from trade receivables itself as an impairment. So what does this mean? This account actually is an estimate, right? Usually, you know, if you lend money to your friends, right? You know, most of the time they'll pay you back, but sometimes they forget, or you know, something happened and they can't pay you back, right? So and you'll never receive that money again, or at least for a very, very long time, right? So to companies, this happens as well. So you know, your customers go bankrupt, they can't pay you anymore, things like that. And what companies do is they make an estimate, right? They estimate how much of whatever people owe them they cannot recover. Usually this is based on historical events. So like in the past, how much they actually got back and how much was never gotten back, right? Past a certain amount of time. So this is how they do their calculation. Each company can do it their own way, right? But in the end, it just has to be reasonable, right? It cannot be absurdly high, like 90%, which doesn't make sense. Like, why would you allow 90% of your whatever people owe you just disappear like that, right? You just ask them to pay by cash, right? It can't be too low as well, because either it means that your customers are very, you know, stable, or you're just underestimating, right? So yeah, but it's always good to just have a certain amount there, right? And how you calculate it, you gotta give a reason, right? Give a good reason for it. Okay, cash at bank, they say debit. So in previous lessons, I did go through why. Sometimes it can be credit, and if it's credit, it means that you have a negative balance in your bank. So how does that work? It just means that at a certain point in time where you had to make payments, right? You didn't have enough balance in the bank to actually make the full payment, but the bank allows it to go through anyways because of, you know, trust between you and the bank, right? So if it's credit, so I'm gonna write in red here. If this is a credit, it's considered an bank overdraft, right? Oh, my handwriting is atrocious today. Bank overdraft. And this is a liability, right? But because it's debit, this is actually an asset still for now. Issued share capital, 100,000 ordinary shares. So it means that if you look at the amount here, 150,000, it means that one share is not $1, right? So this is something you want to take note of if later on you encounter something related to this, right? And retained earnings at 1st June 2024. So what does this mean? Number one, this is an equity account, okay? To make it clear, retained earnings is essentially all the profits that you have made in the past minus any subtractions, you know, like you paid dividends, or any losses that you incur would subtract for it, right? So retained earning just means what has the company produced for itself in the past. So not external injections like taking loans or getting more investors, things like that, right? So that's what it means. And 1st June 2024 is actually the start of the year. So that is a clue, right? And then we move on. Okay, so now they tell us about how much to depreciate, right? So office equipment is depreciated 20% per annum, means per year, using straight line method, and assume scrap value of 25,000. So what does this mean? Okay. 20% per annum means that your 100% is over 5 years, right? And assuming a scrap value of 25,000. So how do we calculate this? We know what they bought it at cost, right? And we know that its scrap value, meaning after all the depreciation is done, is 25,000 left. Wait, let me make sure it's 25,000. I kind of forget things. Yep, okay. So what you do is, first of all, you take 9,700 minus your 25,000. This will give us the total amount to be depreciated over the 5 years, right? So let me get my calculator. Where'd it go? Oh, there it is. Okay. 9,700 minus 25,000. 72500. Okay. And this is your full depreciation amount, right? All across all the years. And then you divide it by 5 years. So 72500 divided by 5 years. Because 20% per year, right? Or you can times it by 20%. It's the same math, to be honest. Because 20% is times 20 divided by 100, which is divided by 5. So 14,500. So this is the annual depreciation, right? And this will be your depreciation expense. And that is for your office equipment, right? So let me draw a box. This is your office equipment, right? Okay, we calculate the motor vehicle next. Right, so second, motor vehicles, 10% per annum using reducing balance method. So what does this mean? Reducing balance means that you take the balance from the previous year, from the previous depreciation, and you take away 10% of that amount. So to illustrate this, right, say you have 100%, right? You take away 10%, becomes 90%. So that's minus 10%. And then you take away 10% of the 90%. Oh, sorry. Which is 9%, so it's 81%. Right, then you take away 10%, and so on and so forth. So it's 8.1%. I can't do the remaining math, but you get the idea, right? So the amount you depreciate actually decreases over the years until a certain amount or zero, right? Or closest to zero, and just write it off as zero. So using this idea, right, you can calculate. So first things first, we need to find the balance to actually depreciate from, right? The balance would be your 225,000 minus whatever accumulated depreciation, because it's from previous years, right? And in order to find the balance, you take whatever that was original amount and whatever they have deducted from it previously, right? So minus of 83940, right? Which gives you 22500 minus 83940, 141060, 141060, and then you times 10% in order to get the depreciation expense for this year, right? And it's 14106. And this would be your depreciation expense for the year for motor vehicles. Okay. So far so good. Actually, let me check if there are any chats on YouTube either. Let me see. Sorry, I wasn't able to see the chats just now. Let me see. It should be fine. Yeah, okay. So there isn't any questions so far, right? If you do have questions, please voice them out, right? Okay, so we move on, right? What does the third information tell us? Allowance for yada yada is to be based on 3% of trade receivables. Okay, so in this case, the company chose to just say, okay, 3% of whatever trade receivables we have at the end of the year, that would be our allowance for impairment, meaning that we don't expect this 3% to pay us back, right? So we just see right here, allowance for impairment, right? Okay, let me remove this. Red colored. Oh. Okay. On. Yeah. Okay. Let me remove this red colored text because it's not really relevant to the question right now. Okay. Right, so the next one we do is trade receivables, right? So 3% of 46900, right, is okay, let me do some calculations again. 3%. 46900 times 3% is 1407. Right. Okay, then after we get this number, we don't do anything yet. We know that the original amount was 1800, right? So, and then the number that we got, the number that we want in our financial statement is 1407. So there is a decrease, right? And because this is a negative asset, right? This account here is a negative asset. When we decrease it, it actually results in a gain, right? Because if you think about it, this is saying that, oh, we will not receive 1407, right? And that's what we calculated for this year. But last year, we said that we won't receive 1800 instead. So in order to make the change, right, there is a decrease in what we won't receive, meaning that if you take it the other way, right, there is an increase in what we will receive. If you can get what I mean. Not sure if there's a better way to okay, this is not a correct explanation for this, but it is the most straightforward way of arriving at the right conclusion as to what to do. Say you owe this trade receivables 1800, right? Last year. And this year, you only owe them 1407. Right? Or they tell you that you owe them 1407 instead. So it means that out of nowhere, suddenly 393 just disappeared, right? And that's the amount that you get to keep yourself. So that is considered a gain, sort of, right? This is not the right explanation for this account, but the line of thinking of what to do is the same, right? Doesn't mean that it's correct. Okay, I'm just trying to find a way to show you why we do this, right? So what we do is we take 1,800 minus 1,407, and this would be, let's see, 393, right? And then this will actually be, well, people can say, you know, a negative impairment loss, right? It could be. Let's see what the answer actually want you to say here. Oh, reversal of impairment loss. Okay, so yeah, they want you to say reversal. Reversal of impairment loss of trade receivables. So this is for your statement of financial performance, right? Or income statement or statement of profit or loss. Right, so this is a reversal of impairment loss. Right, next is cash at bank. This doesn't really affect our income statement. I'm just gonna call it that because it's shorter. Right? Share capital doesn't affect either. Return earning, we gotta take note, right? We gotta keep in mind this KIV. Right? And then we scroll down. Okay. At 31st May, this amount were accrued, this amount was prepaid. Okay, so what does this mean, right? This amount that was accrued means that you have an additional liability, this amount, right? And this amount prepaid means that it was an asset instead of expense, right? So let's look at our rent expense real quick. Rent expense was this amount, right? So what does this actually mean in real life, right? Utilities expense that was accrued means that, you know, you have paid your monthly bills, right? But just so happens that the billing date was after the year end and the billing amount was 580. So you didn't pay that amount, right? But you still recognize it as what you used this year, right? So for example, if your year end, okay, we just use their year end, right? 31st May. Maybe the electric bill only came in, like the utilities bill only came in like middle of June or something like that, right? So you couldn't pay them before, right? But you still recognize whatever that was in the bill for that month, for the month of May 2025, right? So that's what it means by accrued. It means that you have used it, right? You have enjoyed the benefits of the utilities, but you didn't pay for it, right? Not yet, at least, which you will pay for later on. So that's a liability, right? And then for rent expense, it means prepaid means that you pay at the start of the month. So for example, in this case as well, you pay for the month of June 2025, 2,500, right? But you didn't use it yet because it's for June, right? So that amount would be prepayment. It's an asset because if you stopped using on 31st May exactly, you can ask it back. Like you can ask from it back. Basically, the owner cannot keep that money if you stop using it, unless it's written in a contract. Then, in that case, it'd be called a deposit, right? But usually, if it's an expense that was prepaid, most of the time you can ask for it back from the owners, right? Okay, then the last thing that we need to know, right, is a declared dividend of this amount per share. So note that it's per share, right? So previously we saw that the amount of shares is 100,000, right? We've underlined in black under issued share capital. So what we do is we just times 100,000. So 0.15 times 100,000. This will be your dividend dividend declared, and it's on 2025. Okay. here. Okay, so and it says to be paid, right? So what this means is that it's a liability, right? And other than that, I think we can actually carry on with let's see. If I'm not wrong, yeah, we can carry on with the actual answer. So for income statement or statement of financial performance, the first thing we start off with, I like to write $2 signs. We'll see why later. Right, first thing we start off with is revenue. More specifically, we use the naming convention that was given to us before that, sales revenue. Right, so sales revenue. Okay, and this amount would be what they gave us, 595,750. Right, and then you less sales returns, because those are, returns, as the name suggests. It means that customers weren't satisfied with your product and they return it to you, so you gotta give them a refund, right? And you can't really say that amount was a revenue anymore, right? So 4980 sales return 4980. The bracket is just a negative sign in accounting terms, right? Next is cost of sales, right? Cost of sales, and that amount is where is it? 369365. Okay. So this will give us something we call gross profit. Okay, and let me just use my calculator for this real quick. Meanwhile, I'll check for anyone in the chat asking questions. So far, no. So we are good. 595,750 minus 4980 minus 369365. 221405. Okay, that's our gross profit. Right, next thing that we need to do after finding out gross profit is to subtract other operating expenses, right? So other expenses would be things like your depreciation, every other expense that we've talked about other than cost of sales. Right, so we have less other expenses, right? I'm just gonna write in short form here. But don't do that during the exams, right? So we go line by line again, right? So with depreciation expense, which is what we just added up together, right? So first things first, with depreciation expense, right? Here we can write our working if you want. If not, you can write it somewhere else as well. I think they're not as strict with this. 14500 plus 14106. Yeah, 106. Okay. So 14500 plus 14106. 28606. So now we write in the first column. You'll see why later on. Okay. And then the next one that we have is, let's scroll back up. We've done, okay, I like to put a tick after I'm done with it, right? So sales revenue, we've put a tick. Sales returns, tick. Right, this one as well. Loss on sale of non-current asset. Right, so, oh my, what happened? Loss on sale of non-current asset, right? And that would be oh, sorry, I lost it from 1240. Yeah, 1240, right? And then let's go back up. We see the other expenses. Yeah, so we put a tick here when we're done. Wages and salaries. Okay, wages and salaries. What's the amount? 98470. Right? Let's go back up. Utilities expense 17630. Oh, for this one, we probably need to add back the amount that was accrued, assuming that they didn't include it in. Okay, so yeah, right. This is my mistake. This amount is 17. How much was it again? Oh no, 630. Okay, 17630 plus 580. So the reason why they tell you that in the additional information means that it was not included in the amount that was stated above, right? So we gotta add it in, and that amount will work out to be 17630 plus 580 is 18210. Okay. Alright, so we go back up to rent expense. Okay, so we noted that there was a prepaid amount, right? So that just means that we gotta subtract it, because instead of it being incurred already, it is just an additional amount that we've paid, but we didn't use it yet. We didn't use that building or whatever facility that we've rented yet, right? So we gotta subtract it from this amount, which is 38750. So with rent 38750, and then subtract the amount that was prepaid, 2500. Right, so this would give us 36250. Right, and then we carry on. Rent expense is done. Trade receivables is somewhat done. Oh yeah, the reversal of impairment loss. So here, you either count it as a separate segment or you just subtract it straight, right? Let me see what the answer wants as a... Because usually I'll just write it as a negative. Okay, the answer stayed the same. Alright. Because there are two ways of doing it. One is we write it above other expenses as other gain, right? Because this technically is a gain, but you can also see it as a decrease in expense, right? So I think that's what we're going for. Reversal of impairment loss of trade receivables. Right, and this amount is 393. So negative 393. Right, because reversal means the negative, right? And then okay, this one is used up as well, so we put a tick. Right, we use these. So put a tick, and then for the additional information, we'll also put ticks around it. So these two are done. Right, these are depreciation, which we've done. This is done in the previous segment as well, right? So we continue looking. Equity, yada yada. Then we have retained earnings, right? And how we use this is we first calculate the full amount, right? Okay, now I'm gonna check that I have not missed anything. Nothing important that I've actually missed, right? So 5750 minus this amount, yada yada. Okay, gross profit is correct. 12409470182103625. Oh, they separated their depreciation, which is slightly different from what I did. For me, I combined it, but I guess in the exam you could separate it. Not sure what exactly is the correct treatment here, but yeah, other than that, everything else is here, right? The numbers are the same. Okay, so what I do here, and this is why I have a second column, is I actually add everything up first, right? So 28606 plus 1240 plus 98470 plus 18210 plus 36250 minus 393. Right, so we have 182,383. And then finally we get our profit for the year. Ended 31st May 2025. Okay. So let's look at the amount up there. So 221405 minus 182,383. 39022. Okay. Pretty sure this is the answer. Yep. Okay. So hopefully I got this correct, right? According to my friends, sometimes the answers are also wrong, but hopefully I got this correct. Okay, so now actually let me see if I can remove the additional rows first, because I wasn't sure how much I'm gonna take. So let me just see if I can. Oh. Okay, let me just remove the additional rows. Right, okay. So next we need to do the next part, which is prepare statement of financial position. So most of you who are already working, you probably know this as a balance sheet, right? Could also mean actually I think these are the only two names that I know for it: balance sheet and statement of financial position. Right. So other than that, yeah, I can't remember. I don't think there are any other names for it. So yeah, the same thing as at this, and then the two lines below are part of the question. Is the standard formatting for the start of this, right? So how we organize this, right? First things first, we say non-current assets. Okay. Non-current assets, what do we have? So we can put for non-current assets, we'll do something different. So we'll write cost, right, and the amount, accumulated depreciation, and then we have net book value. Okay. So we scroll the way back up. Office equipment is considered a non-current asset, right? So we write that down. Actually, let's identify all of them first, right? Non-current asset, negative, this is linked. Accumulated depreciation is linked to non-current asset. Inventory is considered current asset. Trade receivables as well. Yada yada. Cash at bank also. Allowance for impairment is part of trade receivables. Okay. Then we also classify liabilities, right? I think for now, trade payables is current liability. There are no loans, right? And then this amount is also current liability. Rent expense prepaid is also current asset. Okay. So other than that, yeah, the only non-current assets are the two office equipment and motor vehicles, right? There are a few ways to actually present this, right? And regarding non-current asset, usually is plant property or equipment as the very top, right? Followed by motor vehicles, and then lastly followed by furniture and fittings. Okay. Furniture and fitting will be considered under PPE. Okay. I think regardless, we can put office equipment first and motor vehicle second. I don't remember if there is a hard and fast rule for this, right? So office equipment, motor vehicles, so the cost will stay the same. The tricky part is the accumulated depreciation. So 97500 and 225000. 97500 225000. Accumulated depreciation, we gotta make sure that we add the current year's depreciation in. Okay. So office square 19500 plus 14500. 34000. Right? Motor vehicles would be 83940 plus okay, let me just draw a dot around it, plus whatever the calculated here as well. Maybe I'll use a orange dot. Right, so these two amounts, so 14106, 98046. Okay, so let me go back to black pen. Okay, 98046, right? Net book value would just be the two amounts subtracted. You subtract accumulated depreciation from the cost, and that's your net book value. So 97500 minus 34000, 63500, right? And then 225000 minus 98046, 126954. Okay, let me make sure that this is correct. Probably is. Yep, okay. So the presentation is also the same as the answer, right? So thankfully I'm not teaching anything wrong here. But yeah, okay, it's also nice if you write a total. Not sure if this is compulsory. 22500, so 322500. Right, and then 34000 plus 98046, 132046. Okay, the last one is net book value, so 63500 plus 126954, 190454. Okay, right, so now we can just draw two lines, show that it's the end, or you can just leave it like this, honestly. Next one is current assets, and this one I remember there is also not really a hard and fast rule, I think. But there is a sequence that people like to use, and it's essentially how, from top to bottom, how difficult, how easy it is. So as it goes down the list, it's easier to convert it into usable assets, basically. So what do I mean by that? Okay, first things first is if I'm not wrong, it's inventory, because it's difficult to sell inventory after you've bought it at even the same price, to be honest. Usually you sell at a huge loss, right? So inventory, which is where they go, 39200, right? So current asset, we can revert back to the $2 sign system. 39200. Okay, and then, well, to be honest, you only need one. I think you only need $1 sign. Right, 39200, and then the next one will be your trade receivables. Trade receivables, which is okay. Where did inventory go? Okay, there. We've used up the accumulated depreciation as well, and also the cost, right? And then we have trade receivables. Okay, so we go back down. TR. Okay, this one you need to remember to subtract the allowance for impairment. So we have, where is my trade receivables? Oh dear. Okay. Again, in orange marking, trade receivables, and also the impairment loss. Not this one actually, this amount, 1407. Right, so we just calculate it first. Actually, no, we just bring it down first. 46900 plus, scroll back up, 1407. Okay. Oh, sorry, not plus. What am I saying? Minus. Okay. So 46900 minus 1407, which gives us a 45493. Okay. Okay, and then we have the next one is actually your other receivables. So your rent, prepaid rent, right? So we can write down here prepaid rent, right? Which was 2,500, if I remember correctly. Okay, we just double check on our way up. Yep, 2,500. So we take again, right? What else do we need? Oh yeah, the allowance for impairment is already done. Trade receivables is done. Okay, let's scroll back up. I think everything above is done, so we can continue. Cash at bank is the next one, right? 10700. So, okay, let's scroll down. At bank. Below will be cash in hand, but we don't have any, so... Wait, sorry, I forgot what the number was. Oh no, my memory. 10700. Okay. And yeah, that should be all. So we have total current assets, which is, okay, let's just punch in the calculator real quick. Plus 45493 plus 2500 plus 10700. 97893. Okay. Make sure this is correct. Yep. Okay. And then finally we have something called total assets. Right. Total assets would be what we have here above, 190,454 plus 97893, right? And then what we get would be 288,347. Okay. So far, we've done half of this, right? Half of the work. Next is we do liabilities and equity, right? So we've known just now that there are no non-current liabilities, so we just go straight to current liabilities. Now for this, there isn't much of a rule saying which one comes first, to be honest. So we just do what we've done, right? Trade payables. And this amount has no adjustments and stuff, so 37430. Right. And then we have our accrued utilities, right? Which is 580 if I remember correctly. Yep, 580. Okay, so we take those on our way up. This was done. And also trade payables was done. Right. Cash at bank was also settled. Okay. And then we look at this amount, right? Oh, I just realized I made a math error here. Okay, 0.15 times 100,000. 15,000. Okay. So this amount was declared but not paid, right? It is only to be paid later, like after the year end. So this will be recorded as a what's that called? Dividend payable. Right? Because it wasn't paid yet. So dividend payable. And the amount was 15,000. And it's to be paid within the same year. So current liabilities, right? So here we have total liabilities. because we don't have any non-current. So we have 37430 plus 580 plus 15000, 53010. Okay. And then we go to equity. Right, so first things first we have is share capital. Right. Share capital, which is 150,000. 150,000, right? The next one, usually things like your reserves. So your share premium, your revaluation reserve, your general reserve, you know, all those stuff. And then finally your retained earnings. So all those reserves are not in here in the question, so we can ignore them, right? So we have our retained earnings. And this amount would be, okay, let's go back up. Okay, this has been used, right? So we take it. Your green KIV, right? 61315. 61315 plus your profit for the year. Your profit for the year, which is 39022. Okay. So 61315 plus 39022, 100,337. Okay. And then finally we have dividends. Not sure if they subtracted it directly. Let me check. Oh, okay, they subtracted directly already. So, okay. So sometimes you can just write dividends below, right? But I think in this question they want you to take directly from retained earnings. So minus 15,000. So 61315 plus 39022 minus 15,000. Which gives you 85337. Okay. And then afterwards that's it. Right, because we just do one last check before we actually do this, right? Scroll up, you see everything that has a tick already. This is ticked as well because we've used it. This is ticked as well. So you just do a quick skim through, make sure we've missed nothing, right? And yeah, I think we're good. The other way to check is just compute everything, right? So 150 plus 85337, which is 235337. This is total equity, right? And then finally we have total equity and liability. And that would be 53010 plus 235337. So that is 288347. Yep. Okay, so if the other way to check is to ensure that, okay, I'm going to use a yellow highlighter. This number and this number are the same. So if these two numbers are the same, you have done the process correctly. But if you've missed out, something on both ends, then you will still get the wrong answer. But at least you know that most of it is correct, right? So yeah, that's how you can somewhat check. It's not foolproof again, right? And yeah, that is actually it for question 1. Yes. So let me check if there are any. Okay. So far there are no questions, right? I'll be uploading the VOD as well, and also these self-notes, right? Onto the link tree, and I'll link it in the comments, right? Other than that, yeah, thank you so much for reaching the end of the video. I hope you learned something from this, right? Once again, if you don't understand something, number 1, know that it's perfectly fine. Number 2, ask for help, right? Either from me or from, your teachers, your boss, whoever who you can trust, right? To give you the explanation that you need, right? Once again, I am not a... Oh, sorry, not once again. I've said this before, but not in this video. I am not a trained, professional, not a teacher, not a full-fledged accountant yet, right? I'm just trying to share my experience of learning accounting. Hopefully some of you resonate with this, right? And to me, this is also a learning journey, right? Reviewing what I've kind of forgotten at this point. And yeah, other than that, I hope you learn something from this. I hope that this video has provided some either entertainment or education, right? And yeah, I will see you guys on Friday, 12 p.m. UTC, same time. And in the meantime, please take care of yourselves, yeah? So until then,